Okay, here we go. I'm going to go ahead and get going. And we're going to do chapter 6. Woohoo! Now, I just want to remind everybody that I will be leaving Wednesday afternoon and I will be back in town Monday afternoon the following week. So I'm around, but and I'll have my computer, but I'm not going to be in Yuma. Okay. So we're going to be talking about proprietary funds. That's what it said. They come back this way. Like proprietary funds, internal service, and enterprise funds. This internal service is going to take on a concept that we learned back in managerial accounting when we started talking about joint cost and sequential, reciprocal, and departmental cost. Usually there's a very simple driver that's going to drive out those costs to be assigned out to the other funds. Okay. So we're going to apply the accrual basis of accounting in the recording of typical transactions of internal service and enterprise funds. Again, these are ones that theoretically enterprise funds you're going to want to make money from. Proprietary, you're going to want to make money from. Prepare the fund basis financial statements for proprietary. Identify when an activity is required to be reported as an enterprise fund. Contrast statements of cash flow prepared under GASB and FASB. So here we go. Proprietary funds use the accrual basis. We match revenues and expenses. So basically you got the matching principle going on there. A revenue recognition, expense recognition. Emphasis is on the income statement. These funds do not typically record budgets or encumbrances. Encumbrances being obligations. Proprietary funds use the economic resource measurement. We report capital asset and debt service activities within the proprietary funds. Construction of enterprise fund capital assets are reported in the proprietary fund, not in capital project. Payments for interest and principal are made from their proprietary fund, not from a debt service fund. So because these are behaving more like a for business, you're not going to treat them the same as the other governmental funds where we track the capital projects and the debt service. Statement of net position includes both current and long-term assets and liabilities. Okay. All revenues and expense type accounts as well as transfers are closed to net position. You get your 3 categories: net investment and capital assets, restricted and unrestricted. Here's our internal service. It's used for sales of service primarily to other departments like a motor pool, print shop. You could theoretically do payroll, human resources, some of your admin type activities. So here we go. They have a couple of them right there. Governments have a choice of using the general fund or internal service fund for self-insurance activities. If an ISF, internal service fund, is used, the interfund premium is treated as a revenue to the ISF and as an expense or expenditure to other funds. So what's going to end up happening is, let's say you have some motor pool activity. So you've got Parks and Rec, and they have utilized, let's say, $20,000 worth of motor pool activities. So you're going to record that revenue over there into your motor pool. So you're going to have an accounts receivable. Actually, it's a due to, due from. You're going to have a due to, due from, and then you're going to have your revenue. And then that's going to be over into your internal service fund. That's going to be your motor pool. And then over to, let's say, Parks and Rec, you're going to have that expense of motor pool. And then that's going to be, your liability is going to be a due to, due from. That's the easiest way to call it, is a due to, due from. It's due to internal service funds, due from internal service funds, so on and so forth. Okay, So enterprise funds used for sales or service primarily to other outside the government units such as general public. So you do have like Parks and Rec. They do behave kind of like an enterprise fund at some points. The city does provide a budget for Parks and Rec, but they also charge for those services above and beyond. So you can kind of, so the city isn't gonna be able to pay for the entire cost of the Parks and Rec program. And so the cost that they can't pay for is going to be, the burden of the people. And so like, let's say that I wanted to do a dance workshop in the summer. And they're gonna pay for a portion of the instructor's cost, and then I'm gonna pay a fee, and that's gonna cover the admin side of the city's fees as well as a portion of the instructors, so. Okay. Use of enterprise fund is not mandatory, but is permitted if none of the three mandatory requirements are met. But management would like to see the activity's net cost after depreciation expense. Implications, some services charging fees, recreational facilities, civic centers. We don't have, our airport is separate, but some cities have airports. Some cities also have, they have hospitals as well. Okay, there we go. Common examples of enterprise funds. So you can see the examples there. I wish that we would support YCAT a whole lot more. I had the most scary experience in the city of Phoenix. They have a transit system, and so you get on the cable cars. So my friend told me, let's get an Uber. She lives around Avondale, so she lives in West Phoenix or West area of Phoenix. And she says, let's get an Uber to Metro Center. And let's get on the cable car and let's travel downtown. It'll take us about an hour. And we're going to go to the concert that we went to. We went and saw Def Leppard, Journey, and Steve Miller Band. And then afterwards, we can stop, stay and have something to eat, or we can just get back on the rail and go home. Well, we tried to do that. And then we got to the Metro Center. Okay, everything was going fine, except we got to the Metro Center, realized that neither one of us had phone service. It was like 2:00 in the morning, and we kept trying to get like an Uber or somebody to come out to us, a Lyft, whatever, taxi. I called taxi services. Nobody would come pick us up because we were in the Metro, where the old Metro Center was. And I guess that's a really bad part of town. Anyhow, so a really angry white woman was running around trying to, round up a really tipsy white woman. I wasn't the tipsy one because I was pretty well, my brain was sitting there in full function because I was freaked out. Anyhow, we ended up finding a way home, but it was very stressful. We will never do that again. But anyhow, Phoenix, the cost of those rails are covered by the Phoenix taxes and the Phoenix government. They, it's a wonderful service if you live close to it, or you can get a ride. Unfortunately, we couldn't get a ride. Okay, so enterprise funds are business type activities. They are included in the government-wide statements without adjustment. Internal service funds are generally classified as governmental activities because they service, their main purpose is to service the government. They're not out here. I can't take my car to the city of Yuma motor pool and have them work on it. That's just, no, they're only going to be focused in on the different departments within the city. Their assets and liabilities are included in the statement of net position. Only revenues and expenses on outside sales are reported in the statement of activities. So you can see all this here. You can see the combining worksheets, and you can see the different, they got a very messy flow chart here. So here they are, they're appearing up here in the business. We have got all kinds of, we're changing accrual basis, changing to the accrual basis, combining worksheet and journal entries. Here's our fund basis coming up, and here's our fiduciary. Bonds and enterprise funds. Revenue bonds promise bondholders that enterprise revenues will be used to make payments. These are listed as bonds payable in the enterprise funds. These are backed by the full faith and credit of the government. That is the taxing authority of the government. Some bonds can be issued without voter approval. And like revenue bonds, they can be issued without having to go out to the government, or going out to us, the voters. Some are not. Sometimes general obligation bonds are used to finance enterprise. This may be done to get a better credit rating, lower interest cost. If this is just a formality, the bonds are still listed as a liability in enterprise funds. Bonds are emitted from enterprise funds only if the government agrees and fully intends to pay the bonds from other resources. And so you can kind of see what's going on here. The cost of complying with environmental protection. This is solid waste landfills, enterprise funds. I find it really fascinating, some of the environmental laws. And that's why I always suggest to you all that when you have to take your science, to take environmental science, because I think they give you a good view of green activities. And I know that right now businesses are all trying to go green. And so I think it kind of gives you a better understanding of the process. But anyhow, landfills, along with gas stations, those tanks. So what has to happen is like a landfill or the gas station, and I know the gas stations are not government. But let's say the landfill is the government and it's run by the government. The landfill has to put aside so much money every year in order to cover the cost of the decontamination of that landfill once it is no longer able to be used as a landfill. And they have to ensure that it's not messing with any of the other natural resources. So, I mentioned gas stations. Gas stations I mentioned because because we have tanks at our gas stations that hold fuel, you have to go in and do certain things when the gas station is done and over with. You can't just build over it. You got to take those tanks out. And it has to be done a certain way, and then you have to decontaminate the land, and that's going to cost money. And so again, because you're doing something that is going to provide some type of environmental damage, you have to set up a reserve so that you can, or liability, basically. You're going to set that up saying that, hey, we're putting this money aside for future return to the earth, so to speak, funds. Okay. I have a friend, he's and I don't know what happened, if this, I know he was really big into this when it happened, but there was some government entity, and this was over in New Mexico, and they weren't paying attention, or somebody didn't know what they were doing, and they were blasting out part of this rock for whatever reason. And they ended up blasting it out, and they turned this one river, they completely contaminated it and turned it completely like orange red. It looked awful. And what happened is when they blew one of the holes in the mountain, it let out a bunch of chemicals, some type of chemical byproduct of whatever is in that mountain, and it just contaminated the river completely. And I believe it was on native land. So that was kind of a big, kind of bad thing that happened. And the government had to turn around and fix that and make sure it was taken care of. So it's kind of interesting. So always have to be careful with that. There's been cases, when I was a kid, we had Love Canal. You had the one with Julia Roberts, I can't remember what the name of it was, but it was named after a woman who sued the government because of all the bad water. There is issues like that, and it's up to us to protect ourselves, and we need to be conscientious and protect our resources. If you think of anything about accounting, we're all about protecting our assets. Well, maybe we should take that same attitude and take it to the environment about protecting our assets, making sure that we extend the useful life. Who'd have thought I'd get into that? Proprietary fund statements, statement of net position, statement of revenues, expenses and changes in fund net position, and statement of cash flows. So here we go. We'll look at this. Just very simple. Oh, look at this. Cash flow statements. They're going to have a different format than the private sector businesses. And so they have 4 categories of cash flow: operating, capital related financing, non-capital related financing, and then investing. Let's see what one looks like. Okay, commercial business. They want the direct method. Oh, that stinks. We don't like the direct method. We like the indirect method. So the government's stuck doing the direct method. Interest and dividend revenues reported in investing. Now, remember, there really isn't any dividends for proprietary, for governments. You're not going to pay that. Interest payments are reported in operating sections. And then over here, interest payments are reported in capital or non-capital related financing. So we separate the two. And then fixed asset transactions are reported in capital related financing. The reconciliation of income and cash flows from operations starts with operating income. Here, there starts with net income. And that's it. Oh my goodness, that was fast. So I can go, oh, we're done. So, having a good time here, looking at all these cool things. It's not as hard as you think it is. The only difficult thing that I think that comes with government accounting is the actual reconciliation for the government wide to the fund statements. That's the one part that I'm like, ugh. But the rest of it, I think it's actually fun. And it's really interesting to watch how, because of the different needs and the users need, the external users need to understand the reporting, what's happening with our money, because it is our money. It's not a business's money where they're making. This is a profit. We're not doing that. This is tax dollars that they're using, and they need to show us how they are being good custodians of our tax dollars. So there we go. So I will see you guys in chapter 7.